Welcome back. We are now taking stock of Capri Global and how the quarter's gone by. And for that, we are in conversation with Rajesh Sharma, the MD of the company. Mr. Sharma, good morning. Thanks so much for taking the time out. Well, we are looking at a fairly stable top-line growth with about 27% year-on-year growth in your net interest income. Your net interest income also has risen by around 35%. So can you take us through the various factors behind the top-line growth, and also keeping in mind specifically the trends that you are witnessing in advances and deposits? Can we expect this through the course of the balance of this financial year?
Yeah, sure. Thank you. So I think this quarter we have seen a strong growth momentum in overall AUM. Our AUM have grown 11% quarter on quarter and about 50% up on a year-on-year basis. And that growth has resulted in a higher net interest income, and our margin have also improved because the higher interest rate spreads have resulted in this. This quarter, we also launched the Micro LAP product, where we'll be funding those customers below up to 5 lakh rupees of ticket size in a rural belt against their collateral to the small entrepreneur. So there's a new product we have launched. We have added branches. So now currently we are about operating with the 968 branches to work with. So the entire growth is happening because of the growth in the branches. The AUM have grown, and then we have seen that even our overall spread is also improving. So it is giving a good direction. Despite we launched our new technology, in-house built technology platform, which has taken a couple of months to stabilize. So we will clearly see that in the quarter starting from October onwards, we will see a full benefit coming of the technology, and this year should end on a very good note.
So hi, it's also Samina joining in. The numbers look promising, and like you said, the outlook also looks pretty strong for the rest of the year. Net interest margins have improved significantly in this quarter. Maybe not significantly, but yeah, about 60 basis points Q on Q. What's the outlook on margins going into the rest of the year? Do you think there could be upside risk to that number?
So I think margin should remain at this level, because we also seeing the cost of fund is going up. So any improvement in the margin to some extent will get offset by the increasing cost of fund as well. But overall, we should see a spread maintaining at about 7%, and which is higher by 70 basis compared to previous year, purely because the contribution from the gold loan and micro LAP will help to maintain this increased margin throughout the year.
Mr. Sharma, while we take your point on cost of funds, and I think that's more of an industry phenomena as we see it, but provisioning for this quarter is also almost doubled year on year. Is that simply in line with your net, your revenue number, or is that exceptional? What is behind you providing more for your accounts currently?
So we have seen some of the account from MSME restructured pool have slipped into the NPA, and being a conservative approach, we have made the higher write-off and provisioning in this year to clean up the balance sheet. And we believe that in the year ending, this will not be the phenomenon, and this will be overall in line with our credit cost less than 1%. So this is one of the quarter where we have seen that a lot of slippage have happened from the restructured pool. But on the next quarter onwards, this will be much better.
Right, Mr. Sharma, also a quick take on your expectation in terms of the way you expect the mix to come through over the next couple of quarters, and can that have some sort of an implication on your net interest margins? That's the first part of the question. And so should we start seeing the RBI cut rates? So how soon do you think there could be transmission, and what segments that Capri Global caters to would likely see that come through as well?
So coming to the first part and second part put together, I think we cater to the MSME, which is a ticket size of about 19 lakhs, gold loan, which is a ticket size of 90,000. We cater to the home loan, affordable housing segment. Ticket size again about 17 lakh rupees. So the entire portfolio is very, very granular. If you see, 80% book is a retail, and the 20% balance book is a construction finance. Again, that is also being done in a retail way. So if we come back to how the overall the contribution from each segment would look like, I think the MSME gold loan will be about 28-27% each. About 25% will be from the affordable housing segment, and about 20% will be from construction finance. So this is how the composition would look like.
Right. Well, Mr. Sharma, we leave it at that. Thank you so much for joining us and taking us through the quarter as well as what we can expect going forward. And with that, it's also a wrap on the F&O show. But before we end, India Bulls house